Bitcoin just crash flashed below $64,000. Those of you that have been watching the channel, I have been cautioning you guys that I was really nervous that we're going to have a overall macro scare and just a overall just correction going on moving into the week, right? I know a lot of people have been really negative in the comments, basically saying that I was going to be wrong when I was saying that there was going to be a stock market correction. And I hate that that's the case when it comes to just the overall sentiment, right? Because nobody likes when the market goes down, even if you're like shorting or whatever, like it's never a good thing. I think being a bear is kind of gay, if I'm being honest. But that aside, I kind of want to just kind of touch on a few topics because there's a lot of uncertainty going on. And I do predict that we're going to just be in for a very, very choppy sort of, obviously into like the month, but then probably this quarter is going to be a little bit just underwhelming in my opinion, and probably just favoring the bears unless the bulls can kind of take a stand and do something, right? So, one of my main questions is, obviously they asked me, how do you hedge against your positions? How do you make money in times like this, aside from, obviously implementing artificial intelligence, maybe experimenting with like Claude or something like that. So I just want to kind of touch on just how I hedge against my positions, because in my opinion, I do think that there are still a little bit of opportunities when it comes to doing this. And the reason why somebody would want to hedge against their positions is if you're somebody that doesn't like to short the market and your majority just spot long, which means you've held most of your bags, right? So you're sitting maybe in Bitcoin, maybe Solana, maybe Ethereum, things of that nature. You can basically short the market, or I should say profit on the downside, without actually opening up short positions and being exposed through leverage. Because obviously leverage, it's, even if you're doing very, very low leverage, you're not going to be looking away from the screen. You're going to be pretty much glued to whatever is going on. And so the better way that I would probably suggest doing this is to look into something like options. Now, my two main positions that I'm exposed to when it comes to just my overall investments in crypto are Bitcoin and Bitcoin and Solana. And so the way that I basically either do hedges or whatever the case may be is I'll buy put options, right? So basically what that means is I'm betting that the price of the stock is going to go down. And basically it's kind of like leverage, but not really. So I like to do BSOL is one of the main staked ETFs that you can do on Robinhood. I pretty much just buy options basically out as pretty much around August. Ideally the farther the farther the better, right? Because it gives you kind of that time frame to basically be wrong in the trade, right? But obviously it protects you short term on the downside, and you can always sell the position, right? So for example, if you're maybe buying I think I bought maybe August $6 puts, and so basically that means up until August, the price is obviously going to fluctuate. I think it's up 30% today last time I checked. And so basically you can sell these at any point, right? And so basically what you're doing is you're betting against obviously whenever you're buying a put, you're basically betting that the price is going to go down. And considering that it's BSOL, that means it's Solana. So if I have a lot of exposure to Solana through spot positions, I can obviously put in let's say, you could do $500, you can do $100, you can buy obviously however many you want, right? But just for simple numbers, I think the last time I checked, because I was helping one of my friends do this, was I think he probably bought about $500 worth of options, put in a bid, got accepted, and I think that the payout was something like $5,000 if I'm not mistaken, based on that investment. And that's obviously if he hits on that range or whatever. But you can obviously exercise selling at that point. And so his particular position was he took out loans against his crypto. And so obviously I think he had maybe half a Bitcoin posted as collateral, and then his debt against it was I think $10,000 or $12,000 USDC. And so he had that, and I think he also had Solana against USDC as well on Jupiter. So basically instead of having to pay down that whole amount, he's pretty much hedging against his positions with puts. So obviously if you don't have to put that much money on the opposite side, there's people that do what's called the delta neutral trade. And so what you would basically do is you're taking a 2x leverage position against however much money you have in spot. And so the idea is no matter if it goes up or down, you're pretty much just in that neutral position. But whenever it comes to DeFi loans and stuff like that, which I don't advocate for, there's a lot of, I should say leeway depending on how much you pay down. So if you pay down some of these will offer a 80% loan to value. So that basically means that the price can move against you almost 80% in terms of the value that you've put as collateral. And so when you hedge against this and puts or whatever the case may be, he may have half a Bitcoin deposited, right? But then his put option is going to pay out basically $5,000 if it goes pretty much in like close to that range. And so basically what would happen is if he just pays that down, then he's mitigated like a good portion, and like Bitcoin can drop another, I believe, like 30%, right? Or you can buy more Bitcoin with that profit from the put and then like add that as collateral and create a higher buffer. That's still kind of like a risky kind of position in my opinion. Like that's completely up to like him and whatever you guys particularly want to do. But I know this is kind of like a complex topic. If you're not like obviously seasoned into investing and crypto and all that kind of stuff, I understand how this could be foreign considering that this is options with stocks. Whenever it comes to buying put options on like Bitcoin positions, I like to buy MicroStrategy because it's just very, very volatile. So like obviously whenever you're in like the peak of like a bear cycle, it's always good to buy call options, which basically means you're betting the price is going to go up. But when everything is very like euphoric and everyone's like going crazy, there's a lot of people that basically do IBIT. This is just like my opinion and speculation, yada yada yada. But there's been a lot of rumors with the price action of Bitcoin and how BlackRock is now involved, that basically what's been going on with the price suppression of Bitcoin and why the whales are like not, they're not worried about the price like not going up and they're still making money, is because basically what they're doing is they're using the options to basically accumulate Bitcoin. So what that means is they're buying spot every time it crashes, and then every time Bitcoin rallies, they basically buy put options against the IBIT. And so basically what that's doing is that's crashing the price of Bitcoin, just because of like algorithms and that kind of stuff. So they're making money off the option, and then they're basically taking profits on that option to accumulate more Bitcoin. So there's many, many strategies when it comes to your overall investing. And, not two people are like the same, right? Like there's people in different positions. Me personally, I like to just kind of be as much out of the market as I can in terms of like leverage exposure. Obviously I'll take like short-term like leverage positions if like we get like a massive crash or a massive pump. I'll just do that kind of for fun, but you have to pretty much bet that money's going to go to zero. That's kind of like the mentality you have to have. You can't have any kind of like emotional attachment whenever it comes to your investments, because you never win that way. So with that being said, that's just like, a few of like the little strategies that people can do to hedge their positions without being exposed to leverage. Another thing is whenever you're basically opening up, like I don't advocate for perpetuals. I can do this if you guys want to, whenever it comes to leverage, but there's people that do this, like they'll deposit like Bitcoin or Solana and they'll basically use that as a collateral. It's not really wise to do that whenever you're shorting it. You always want to do it in the form of like USDC, because you want to think about the collateral that you're posting, right? So if you post like maybe, let's just say $100 worth of Solana in collateral, and the price of Solana is dropping, the downside is a lot more risky in my opinion, because the value of your collateral is also dropping. This also works as like a long position. So if you did like $100 worth of Solana on $100 worth of Solana or $100 of like USDC, and you did like a 2x leverage, the downside perpetual versus like, Solana versus like USDC is, if you're doing 2x, then you're more or less like 50% if you're doing USDC. But if you're doing something like Solana and you're doing like a 2x leverage in a long position, you're basically, it's like about 30 something percent because of how the collateral kind of shakes out. And the reason why you wouldn't really want to short it with like Solana as like your underlining or even Bitcoin is because the value of that goes down. So like the idea would be maybe you post it as collateral with like USDC. If you want to short it, you short it, and then you can then take profits, in the form of like USDC, or you can do it in like the form of like Solana. So like if the price goes down and you're making profits, then obviously you can accumulate more that way. And then you can still add that to any kind of like collateral that you're exposed to, like if you're like doing like DeFi loans or anything of that nature, or just trying to accumulate. So with that being said, if you guys have any questions or comments, I know this is very complex. Obviously we have a lot of time. I think that, nobody should really be in a rush to be jumping back into the markets. I think if you're, I think that most people, if you haven't sold by now, you're not going to, and you don't want to rush back in and just like pour all your money back into the market right away, because obviously things are really, really, attractive, like in terms of like some of the prices, but if it goes lower, you always want to have more dry powder on the side. So again, drop any comments of what you want to see next. And with that being said, I will see you all soon. Bye.